Okay, so welcome to this live stream, and hopefully today I'll be able to help you out again with another pattern that can really help you in your trading experience. It is an experience, really. Thank you, Ridwan. Thank you. I do spend a lot of time on my videos. Ridwan says your videos are so explanatory. And in case you guys didn't know, I am a teacher. I'm an engineer by profession, but I chose to go into teaching. Okay, so trade this pattern and increase your wins. And it's so important to learn the patterns. Listen up. Trading without your technical analysis is like trying to get to a destination without a map. And so all we do with technical analysis is we're trying to look at historical data to help us to predict what the charts or what the market wants to do in the future. So that would be in the next 1 minute, in the next 5 minutes, in the next 1 day, in the next 1 month. And with this understanding, then you're better able to know, to make those close to perfect entries into your trades and all those, and that most important, all important exit. I have some students on my Telegram group. Sometimes they'll get into a trade and then they'll text, "Oh, I want to exit the trade. What do I do?" No, that's like driving and not knowing where the brake is. Getting into a car, you're driving it, and you don't know how to stop the car. Don't ever get into a trade if you don't know what to do to exit the trade. Okay. Double tops and double bottoms. What are they? Double tops and double bottoms are important technical analysis patterns. They're used by traders. So if you are a trader and if you're not using it, then I don't know what to say. And it's not so much that you use it particularly, but you observe it. And once you observe that pattern forming, then you're better able to inform your next move. Do you enter the trade? Do you exit the trade? A double top has an M shape. Now I'm going to move down to my diagram. So here we have, where's the double top? So we have price action would have been heading up. It hits a resistance point 1. It moves back down again. It hits another point. It travels back up again, tries to break above previous resistance 1. It does not make it above previous resistance 1. And then what does it do again? It attempts, then it gets rejected at previous resistance 1, making this a second resistance point. When it gets rejected at previous resistance point 2, at previous resistance point 1, making a second rejection, then that gives you an indication that if you're in a trade, it gives you an indication that this baby is going down. That's it. So if you're in a trade and you're in that trade and then it retraces down to the neckline and you're hopeful and it goes back up and you're like, yes, it's going back up. And if it can't break above the previous resistance and if it heads down and if you see this M shape, then it's best to just get out of the trade. You get out of the trade once it breaks below the neckline. Now I'm going to go to some live charts so you can actually see a double top. I'll move to my charts. We'll come back to the double bottom. So when we go to the charts, now I have been trading BNB. BNB has been making some awesome moves. But right here, I have BNB. I'm going to show you. I have BNB on the daily. So this is a daily. Let's change this a bit. Okay, so this is a daily of BNB. I'm going to zoom out. Sometimes, like what you do, you got to learn to play around with your charts. You got to zoom in, you got to zoom out, you got to change different, time frames. You know, you're just trying to get an angle to see. It's almost like cleaning your windscreen when it's raining. You're just trying to get a better feel for what's going on. So we have BNB, and this is a daily. And for those of you who don't know BNB is a coin, the Binance token for the Binance platform, which is the number one, pretty much I would say the number one crypto platform, I guess, in the world. We're on the daily. So let me find a situation with a double top. So this is, I'm going to go to Ethereum. I found an awesome example on Ethereum. But going all the way back is where I found it. So I went all the way back to, this is like 2017. So, and I found it down here. So I'm going to zoom in. To zoom in, by the way, on TradingView, you hold your control key and then you move your mouse to keep the section of the screen that you're interested in. This is the part we're interested in. So this is our double top. Now, the thing with double tops is they may not be as clear cut and as perfect as, you know, in the textbooks where the second top is exactly at the same price level as the first top. But this is what it's going to look like. Zoom in. If you zoom in too much, sometimes you lose the orientation of the shape. So let's just keep it this way. And this is our double top. Now let's look at what happened. This is a daily. So we have Ethereum over so many days rises up to this particular first spot, resistance spot 1.1. It then, look at this cross. If you don't know about death crosses, check my videos on death crosses on my channel. Here we have a death cross, and I have the EMA, I have the 8-day and the 20-day EMA here. So they're crossing, and of course it goes down after the cross. So now we're at this bottom part of the M. And then price action starts moving up again. But I'm going to draw a price level. And I want you to take note. I'm drawing it from this point, which is the first resistance point. And when we do that, can you see how, I don't know, is this, how many months later? Let's see. This is June 2017. And this is September 2017. So that is 3 months later. We have Ethereum hit this price level of, believe it or not, guys, Ethereum, which is now about $2,800, was in 2017 $398. Imagine if you'd picked up a few of those. It hits $398, and over the course of about a month and a half, it comes down and it travels down. Then when it's traveling back up, guys, at the same, literally the same price point, it hits another resistance. The same resistance created 3 months previous. So if 3 months ago I had this white price level on my charts, and if I was in a trade, and I'm so happy because you can see, let me draw a vertical line. You can see to the left of this vertical line, everybody's happy, everything is green. You wake up in the morning, it's green, and you're doing well. Once it approaches the white line, I need to begin to be observant of the fact that we got rejected at that price level 3 months prior. There is a greater likelihood, again, technical analysis is a game of probability. There is just a greater likelihood that there will be price rejection, and that's exactly what happened. And over the next, it looks like 2 weeks, 3 weeks, the price again came down. Of course, we know since then Ethereum has come back again. So that, my guys, is a typical double top. You always want to look out for them when trading. So let's get back to the double bottom. I like double bottoms because here the double top is a bearish reversal in trend. So the trend prior to the double top was bullish. You hit 2 double tops, then it's a good sign that the trend is reversing, which is what happened in the case of Ethereum. I love double bottoms, and double bottoms, again, identify the fact that we're looking at W's and M's. Your M-shaped data on your charts is a bearish trend. Your W-shaped candlesticks, they give you a bullish trend. Now, I am more a bullish trader than a bearish trader, so I like my W's. So a W does the opposite of what the M's do. They're called the double bottoms, and it says a double bottom has a W shape and is a signal for a bullish price movement. So with the double bottom, you're already in a downtrending market, indicated by the red. So it comes down, it comes down, it comes down, and then it hits an area of support 1. And then it heads back up to the neckline, and then it heads back down again. And surprisingly, at that same price level, at that same area of support, there is a greater likelihood. It's always about likelihoods. There is a greater likelihood that there will be a bounce upwards. So this, again, we're going to look at on the actual charts now. Yeah, one thing that you have to pay attention with is the fact that these patterns evolve over a period of time. And so they're not, you just have to observe them over a period of time. So if we go all the way back to the last couple of weeks, so I'm going to go back. Okay, so here we are. Oh, guys, look at what Ethereum has been doing. Does that not look beautiful? Like to the moon and never coming back again. That would be awesome. Okay, so this is Ethereum, and we'll zoom in. So going up, and then pulling that back. Do you see what I see? What I see, I'm going to draw a price level. I see a support. Now, this is just so beautiful about the charts. The first thing is, if you look at that EMA, the yellow EMA, which is my 20-day moving exponential average, can you see how price action comes down and bounces off the 20-day? It bounced off the 20-day on the 19th of April, the 20th of April. So price was coming down, down, down. I use the 20-day, I use my EMAs all the time when I'm trading, because when you're in a trade and you feel it's time to come out of your trade day, and look at how it comes down, and it bounced off the 20-day. It goes up, it comes down again, it bounced off the 20-day. And where is our support line? Our support line is going to be at this point. Now look to the left here. This point, this 2, 3, 4, 5, 6. All these candlesticks touched. I'm going to start drawing it from the left. There. So resistance to the left here. We move on. Resistance here, but price action breaks above resistance. That's always nice. But we come back down again. Are we going to break below? It's not resistance at this point. It's now support. Are we going to break below support? No. It bounces off it. And this is our first bottom. And this is our second bottom. Can you see the W? Let me try and create that W shape for you. This tool comes down, up, down, up. Okay. And that, which is good. We can see the W. You can see the W. Okay, this is the neckline. So first we have support, where not only did it bounce off the 20 EMA, it also bounced off the support there, the white support. So it bounced off the 20 EMA and the support line. But this neckline, now this is the neckline that it talks about on my document, this part. And I'm going to give that a different color for clarity. Okay, we'll make that a red. You see that red neckline? is so important because it's at this red neckline that if you are out of the trade, you're going to go back in the trade once you see a close above the pink price level. Price action has to close, and we're not looking for a close above the daily unless you're in it for the long term. You're usually looking for a close, just depends on how you trade. With the, let me stay here. Oh guys, look at the, if you look at it now, can you see this beautiful W? And this is what your double tops and your double bottoms do for you. Beauty in action. You can't go wrong. And that's why I said, trade this pattern and you will increase your wins. And being a profitable trader is about having more wins than losses. You're going to have losses. It's just the way it is. Okay, and I'm done with my teaching. So let's go over to the questions.